The ultimate tech stock tier list. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the hoodie to prove it, people. And today we're going to be speaking about 15 tech companies. If you haven't seen one of these tier list videos before, we're essentially going to be rating these companies on a list from super amazing all the way down to stay away. And a lot of you guys have asked for this video, specifically for the tech stock video. So here we are, people. So I've gone ahead and gotten 15 of the juiciest tech stocks that are out there. The biggest market caps. We have all of the FANG stocks. We have all of the most popular ones right now. We have a nice selection. And if you know me, you know that tech is my favorite sector out of all of the sectors from a long-time investor's point of view. So in this video, there probably won't be any stayaways, but I'm going to try to be as fair as possible. Right before we get to our first company of the day, guys, oh my goodness, we are just about to hit 12,000 subs as of recording this video. This day last week, we just hit 10,000. I just have to thank you all so much for the absolutely immense support lately. I mean, 2,000 subs in a week is literally mind-blowing to me. You guys really seem to be enjoying the double uploads, so I'm going to say if this video gets 100 likes in the first 2 hours of being uploaded, I will double upload yet again today. And yesterday you got 100 likes within 45 minutes. You guys are nuts. If you are new around here, feel free to join the family. Hit that big juicy red subscribe button. We ain't slowing down, baby. And lastly, once you've watched this video till the end, drop me a comment down below. Let me know what stocks you would change position wise. But with that being said, guys, I don't want to waste any time. Let's get straight into the video. So here we are, guys. I have everything ready to go. We have our 15 logos all down here, and it's not in any particular order today. I want it to be a little bit random. So going through the companies, we have Activision, we have Adobe, we have Alibaba, Amazon, Apple, CrowdStrike, Facebook, Google, IBM, Microsoft, Netflix, PayPal, Qualcomm, Shopify, and last but not least, Tesla stock. That is a mouthful. So if you haven't seen one of these videos before, essentially what we do is we just go through each company very quickly. There is 15. Obviously, I'm not going to go into any in depth, and we rate them on this tier somewhere. Straight into it. The first company of today is Activision Blizzard, and they have had an incredible little run. I mean, on the 6-month chart, they are up 37%, and I mean, from the lows, they're up even more than that. They're up over 56%. So these guys have done absolutely incredible. It's one of these companies I kick myself over every day, because I remember looking at them when they were down here, when they were approaching the $50 mark, and I was considering investing in them. Ultimately, I never did. We can see a 52-week low of 44.81, and they're pretty much currently at the 52-week high, which just so happens to be approaching their all-time high. Now, this company has some absolutely immense growth history, okay? I mean, here's the Great Recession, and things went down, 40%, but since then, the growth has been immense, guys. I mean, 10, 11 years, whatever you want to say, 767% growth. The gaming industry as a whole is getting so much more popular, especially with platforms like YouTube and Twitch becoming more and more popular. And Activision has some of the most popular games in the world. Call of Duty, Modern Warfare. We go over to Blizzard, and there is massive names like Overwatch, World of Warcraft, of course, Hearthstone, Diablo, so on. And I do believe they're in prime position to keep growing at a really nice rate going forwards. I see no reason for them to have to slow down. I think I am going to open up a position in these guys relatively soon. I don't think they're the best in the whole wide world, but I think they deserve to be more than mid-tier. So to be honest, I am going to put them up to amazing. I mean, their growth history is just absolutely phenomenal, and they've bounced back really, really well lately. So there you go, Activision. Well done. Okay, next up we have Adobe. Adobe is one of only 2 services I have any sort of a monthly subscription signed up for, and that is obviously for Photoshop, so I can make the juicy thumbnails for you guys. And again, a company with an absolutely fantastic last 6 months, up over 34%, approaching that 35% mark. And again, on the 5-year chart, just absolutely beautiful growth, over 450%. And on the max stock chart, it's just lots of upwards growth, especially in recent history. The thing about Adobe is, okay, right now we're at a PE ratio of 61.47, so to be honest, it is quite high. Adobe offers services that, no competition really is up to par with. Photoshop and Premiere Pro obviously being 2 of the most popular ones that so many people, especially on YouTube, would use. But then you also have professionals in many other industries that would use a lot of these products. I think that they offer an absolutely amazing service, but I also just struggle to believe that they can keep growing at this rate. But with that being said, there's not a lot of competition out there for them. They've shown us that they can do it before, and they do have quite a nice balance sheet as well. Current assets 6.6 billion, total assets 21.6 billion, current liabilities 5.1 billion, and then we have total liabilities 10.722 billion. But a lot of their current assets comes from unearned revenue, okay? So essentially, with Adobe, I'm signed up to a yearly plan, but you spend monthly. So this liability, if everybody keeps spending their plan, it's not realistically even a liability. It will turn into assets. Honestly, if the PE ratio was a little bit lower, if I thought they were at a better price point, they would be in the super amazing tab, but just because I personally believe they are a little bit on the overvalued side, and I could see a considerable pullback at some stage, I am going to throw them into amazing. I mean, they own their market. Okay, Alibaba, one I've been asked to speak about loads before, and I just never really got into it. So a lot of people like to call these guys the Chinese Amazon, and we can see that if we go onto the website, there is all these different categories. It looks a lot like Amazon right off the bat, as a lot of these websites do. Balance sheet, current assets 65 billion. Total assets 185 billion, liabilities 34 billion, total liabilities 62 billion. I mean, it's an amazing balance sheet. It's a Chinese company, and Chinese tech really is booming at the moment. They have a lot in their favor, but nothing would ever make me want to invest in this company over Amazon. I mean, you can say they're the next Amazon if you want, but I don't really see that as being true. I would much rather put my money into Amazon. I know a lot of people really love this company. A lot of people have this as their biggest position. They live for Alibaba. Like, I don't want to put them on this level, but I also think mid-tier is a little bit too mean. For the first time ever, I added a new column, okay? Quite good, and that's where Alibaba is going to go. So in between amazing and mid-tier. Because at the end of the day, they are quite good, and I could see why you'd want to invest in them, and I wouldn't put it past me to invest in them at some stage, but as of right now, nah. And that brings us very nicely onto Amazon, and they just go straight to super amazing. Very good balance sheet. Incredible company. One of my biggest holdings in my portfolio. I just love everything about Amazon. Recently hit $3,200. Okay, if we go to the monthly chart, only a month ago they were down at $2,500. A company with a now $1.6 trillion market cap went up 25% in the space of a month. It's incredible. These guys are only going to benefit from the new stay-at-home culture, from more people ordering more and more products online. I understand there is going to slowly but surely be more competition as the years go on, but I mean, Amazon is the big boy. They're the only people I really order things from online anymore. I just bought this new headset the other day because my headset wasn't working. You know, I didn't have to go out, I didn't have to go to a shop, didn't have to put on a face mask. Went to Amazon, got it at the best price you ever will get it at. Sorted. Got here 2 days later. This is the second product that I am signed up to monthly. I pay for Amazon Prime. I love it. I more than get my money's worth. I absolutely love it. Boom. Up at super amazing. I love them to pieces. Alright, that brings us nicely onto Apple. Apple is the second biggest holding in my portfolio. It equates for something like 40% of Berkshire Hathaway's portfolio. I mean, it goes without saying, I have to put them up into super amazing. It's that simple. I love them. Again, on the 6-month chart, up 21%. Absolutely beautiful. 5-year chart, pretty much 200%. They're at a PE ratio of 30 with a market cap of 1.66 trillion. I'm more than happy to buy these guys at the highs as of right now, and I will do so. I have done so and I will do so. Balance sheet is beautiful. Current assets 143.7 billion, total assets 320 billion, current liabilities 96 billion, total liabilities 241 billion. So very, very nice balance sheet. With the likes of 5G technology inbound, their loyal customer base, myself included, they have to take the super amazing spot for me. Okay, CrowdStrike. On the 6-month chart, CrowdStrike is nearly up 100%. They're a cybersecurity technology company. I actually spoke about these a couple of days ago, I think. I quite like them. Another company who only went public just over a year ago, the 14th of June 2019, and since then they're up a total of 81.81%. But again, a lot of that growth started with this new stay-at-home culture. Right now, shares trade at a whopping 42 times revenue. It's one of the highest in the market among nearly 700 large cap stocks. The thing is, they look like the best player in all of cybersecurity, so a bet on stay-at-home culture continuing. You know, CrowdStrike is a bet on that. For me personally, I do really like the look of them. They're still quite a new company. They're trading at really high valuations. Oh, again, this is a tough one. They're going to be between here and here. I'm going to put them into quite good, purely based off the fact that they are still such a new company and they've already gone on such an incredible rally. I do understand that rally could so easily continue, but they don't get my heart racing, you know, they don't get me really excited. I'll put them into quite good. That brings us on to Facebook stock, okay? The biggest holding in my portfolio. Go straight up the super amazing, man. I love them to pieces. But what about the ad boycotts? The ad boycotts mean nothing. At the end of the day, they have literally billions and billions of monthly active users between Facebook, Instagram, WhatsApp. They have one of the best balance sheets you will ever lay your eyes upon. Current assets 69 billion. Total assets 138 billion. Current liabilities 15 billion. Total liabilities 33 billion. I mean, it's just incredible. Honestly, I'd nearly put another tab in called God tier up here and put Facebook there, but I'm just going to leave them in super amazing. If you follow the channel, you already know how I feel about them. And that brings us on to the Google, okay? You could say that I am a big fan of the FANG stocks, because again, I'm throwing them straight into super amazing. I know some people might not agree, but I mean, it's Google, it's Alphabet. You're all using their service right now. You are all, by watching this video, supporting Google or Alphabet. Every time you watch an ad, you're supporting Alphabet, you're supporting me. Every time you click onto the app and you see banner ads, you're supporting this company. And there is way more to this company than just YouTube. And why I really like them at this price is that on the 6-month chart, they're only up about 7%. I mean, I think they deserve to be up a lot more. Market cap over $1 trillion, PE ratio 31.5. I think it's a really good price point. 5-year chart up 129%. Go back to about 10 years ago, up 516%. It's another one of these companies, like, who's going to take them over, you know? Who is going to be the next Google? It's not really very doable. I just think they're incredible. They're going into super amazing. I don't need to spend much time on the super amazing companies. You're all very familiar with them. Okay, IBM, an American multinational technology company. IBM produces and sells computer hardware, middleware, and software. They also provide hosting and consulting services in areas ranging from mainframe computers to nanotechnology. They're also a major research organization, holding the record for the most US patents generated by a business as of 2020 for consecutive 27 years. So these guys have been in the game a long time. 6 months chart still down 13.36%. Market cap 105 billion, PE ratio 11.72. 5-year chart ugly. 5 years down 31.4%. And again, the max stock chart, I mean, it's just a little bit choppy. It's a little bit all over the place. I can understand why people could think it's a very good idea to get in at this price. I mean, the PE ratio is very low, but I mean, they've been downtrending for literally, what, 7-8 years? So many cloud-related companies performed so well in the last 3 months or so, and IBM just haven't whatsoever. Now, I know that's not all they do, but still. Now, they do also have a 5.5% dividend yield, which is obviously quite nice, but I mean, I just can't get over how poorly they've performed for pretty much a decade. Then we go to the balance sheet. Current assets 38.9 billion, total assets 153 billion, current liabilities 40 billion, total liabilities 133 billion. It's not very good, is it? I can't understand why you might want to buy this company, especially with that 5.5% dividend yield. You know, it could negate a lot of short to mid-term losses that could arise. But I just see so many better places to put your money. So there actually is going to be a company that gets put into meh. Again, I can understand why you might like them, but to me, no appeal. Okay, now we have Microsoft, and for me, again, they're in super amazing. Now, I will admit I'm biased. You see these 5 companies that are in super amazing? They are my 5 biggest holdings. But they are my 5 biggest holdings because I believe they deserve to be in the super amazing tier. I mean, Microsoft is just in such a powerful position. 6-month chart up 30%. Very, very nice. We go over to the 5-year chart, okay? 5-year chart 350%. And we go to the max stock chart, okay? And just look at the growth. I mean, I know here we a little bit sideways, whatever, but now they're at a stage where surely they just have to keep growing. $1.62 trillion market cap, massive valuation, and the PE ratio is at 35.58. So again, I know traditionally that's high, but for these massive market cap tech companies, that's not that high. Current assets 170 billion, total assets 285 billion, current liabilities 58 billion, total liabilities 170 billion. I mean, it's an incredible place. They're in so many little industries. They have to go into super amazing, in my opinion. Okay, we have Netflix, the only FANG stock that I personally do not own. And to be fair, they have outperformed literally every single other one of the FANG stocks, up 61.9% on the 6-month chart. If we go to the year, it's a little bit less, but it's still good, 47%. The 5-year chart, again, still incredible, 378%. Netflix, market cap 241 billion, PE ratio 111. Balance sheet. Current assets 6.4 billion. And if we look back through the last 5 years, that's not very good, okay? We go down, total assets 35.05 billion. So the total assets definitely have been going up. Now, current liabilities 7.8 billion, total liabilities 26.6 billion. It's not the best balance sheet out there by any means. I understand it's a really easy business to understand. It's a subscription service. It's not that expensive. It gives people an awful lot of entertainment. There is more and more competition. You have big companies like Amazon and Disney offering their own video streaming services, but don't get me wrong, Netflix is by far the best that is out there right now. It's just at this price point, I couldn't justify investing. I can understand why you would. I mean, the growth has been disgusting. It's been amazing. And they are one of the FANG stocks. I mean, they have that behind them. It's just me personally, I wouldn't be happy to do it. Now, I understand the appeal. Like, if it was me, I'd probably be putting them into quite good, but I'm not going to be biased, and I am going to put them into amazing. I just don't think they deserve this super amazing spot. I know some people will, but I'm going to put them into amazing. The next one is PayPal. 6-month chart, up 54%. It's been incredible. What I'll say about PayPal from the start, okay, is that this is one of the companies where if there is any sort of a significant second market crash, if it does happen, I will be loading up. As of right now, though, again, I think it's overvalued. Now, that's not to say that I don't think the stock's price can continue to go up. It certainly can, and it more than likely will. But right now, PE ratio of 112, market cap of 209 billion, it doesn't add up to me personally. The service itself, don't get me wrong, I love it. I think it is amazing. There is a lot more competition in regards to different payment systems in the last few years alone, though. Companies like Venmo and Revolut are some ways in direct competition with PayPal. But I mean, there's no denying. 5-year chart, 364% growth. It's incredible. This is one of those companies, okay, where I genuinely do think buying at this price more than likely will be okay in the long term. I'm just personally not happy to do it. You know, I might miss out. That's fine. You don't have to be involved in every single company that's out there. Current assets 38 billion, total assets 54 billion, current liabilities 27 billion, total liabilities 38 billion. So a good balance sheet. Good balance sheet. Again, it's weird putting them into amazing because I'm not willing to invest just yet, but I am going to have to put them into amazing. I mean, to me, they're far better than these two. Qualcomm, okay, an interesting one, and it is a company I have actually bought into. So the biggest play on 5G essentially, and I personally think that 5G is going to be an absolutely fantastic thing. 6-month chart, pretty much break even. I mean, we're up 1.69%. 5-year chart, it's absolutely all over the place, but ultimately it's up 43.78%. They do also have a dividend yield of 2.81%, so it's been a decent bit of growth with dividends reinvested. And the max stock chart, .com bubble absolutely did them in, but since then it's been a nice little bit of growth. PE ratio at 27.46 and a market cap of 104 billion. This is actually a little bit weird, okay? So I'm actually going to bring them down to quite good because I think the growth prospects are fantastic. If everything to do with 5G goes as planned, Qualcomm is going to be amazing, but to an extent, they're still a little bit riskier than a lot of these companies here, in my opinion. And I know I'm invested in a company that I'm saying is quite good, but it is because I think the growth prospects are very, very good. It just also carries a little bit more risk than some of these companies, in my opinion. Current assets, 15 billion. Total assets 31 billion, current liabilities 9.7 and total liabilities 28.8. So again, a good balance sheet, but nothing jaw-dropping. If Qualcomm does end up being a massive player in 5G, which we do expect it to be, I mean, with everything they have going on with Apple, they more than likely would go up to amazing for me. But for now, I'm going to try to be fair. I'll put them into quite good. Two more companies. The first one is Shopify. Shopify's growth has been utterly disgusting, okay? 6-month chart, 134%. 5-year chart, a light 3000%. Market cap of 120 billion. No PE ratio. Current assets 2.7 billion. Total assets 3.4 billion. Current liabilities 288 million. Total liabilities 430 million. So very good balance sheet. Smaller than a lot of other companies, but a good balance sheet. Very good balance sheet. But I mean, guys, I just think at this price, it's just so overvalued to me. Operating and net loss for Q1 were worse year over year. Operating loss increased to 16% of revenue and opposed to 11% a year ago, and net loss widened by 7 million, which was about 30%. Their revenue was going up and up, but their net income and EBITDA is just getting worse. Like, I love the company, I love what they do, I think it is fantastic, and I more than likely will use this company to sell this merch, but the valuation is just absolutely insane. Honestly, guys, this one will probably ruffle a few feathers, but I think at this price point, Shopify is a mid-tier company. As a company, I think it deserves to be up here somewhere in amazing, but at these valuations, if we're speaking purely about buying the stock, mid-tier. I can obviously see a world where it keeps going up, but it's I don't know, it seems too good to be true. Now, sometimes, you know, stocks will just keep going up, you know yourself, stonks only go up. But for me, I wouldn't be comfortable buying in at this price. That's just me. It's one of these companies that a lot of people say you shouldn't try to time. I appreciate it, I understand it, I understand if you're an investor, you're probably going to make a lot of money in the short term at least. For me personally, I'm not comfortable investing. And the last one is Tesla, okay? They have to go to super amazing. Day by day, I am getting closer and closer to investing in this company. Just recently hit over $1,500 a share. The 1-year stock chart, up 530%. Again, this is a company I think if you try to time, you're going to lose out. But again, me personally, as a person, I'm not comfortable investing a decent amount of money in Tesla at this price point. If a considerable pullback ever does happen, I will get in. If it doesn't, I'll miss out. It just is a really volatile company. I've said this in a few videos lately. It can go up and down 30 to 50% at the snap of a fingers for next to no reason whatsoever. Now, I do believe that in the very short term, it's only going to keep going up. I mean, they could be getting included in the S&P 500 if they have the next good quarter's earnings, which is obviously going to do amazing things for the company. And if I miss out, it's completely fine. So, you know, again, you don't have to be in every single company. But I am putting them at super amazing. I mean, they just are super amazing. You know, they're probably one of the most popular companies in the whole world. And I love what they stand for. I love what they do. I love their vision. I love their mission. I love what they want to do to the world. So they have to be in super amazing. Okay, now what is usually the hardest bit? I'm going to try put everything into exact order. So for me, super amazing. Facebook wins, okay? My biggest holding, they have to. Second is Apple. My second biggest holding, I love them. I'm going to go Amazon, then Microsoft, then Google, then Tesla. I'm going to put Netflix first, okay? Because I think that's where a lot of people would put it. I'm then going to go PayPal, then Adobe, then Activision. Quite good, okay? For me, Qualcomm first, then CrowdStrike, then Alibaba. And then obviously mid-tier, Shopify is the only one, IBM is the only one. And that is the exact order I put them in. You guys aren't going to agree with me. I understand that from the start. A lot of people have strong opinions on these tech-related companies. Drop me a comment. Let me know what you changed. Let me know what I made you angry about in today's video. Shopify should be God tier. Just let me know. Thank you all so much for watching until the end. It genuinely means an awful lot to me. And again, don't forget to drop me a comment down below with your thoughts on the video, or any other videos you would like to see me doing this tier list in. I'm more than happy to do them. And again, if you're one of the people who watches till the end of the videos, just thanks so much. It is you guys who is driving this channel's growth. I mean, we're going to get more than 2,000 subs in the space of a week. That is absolutely insane to me. I struggle to comprehend it, but I'm so appreciative. With that being said, guys, I do hope you enjoy. I hope that you have an absolutely fantastic day. I will see you all for tomorrow's video. Peace.